Good morning, ladies and gentlemen, and welcome. I am honored to stand before you today as we kick off this year's Arizona Speaks event. My name is Martin Guerrero. I am the Community Affairs and Small Business Advocate here at Square. And as we gather virtually for Arizona Speaks, finding funding and access to capital, we recognize the critical role that financial intelligence and access to capital play in the growth of small businesses. Today, we are privileged to have experts from the National Bank of Arizona who will share invaluable tips on financial intelligence and guide us on how to access the capital necessary for our businesses to thrive. Now, you might be wondering why I'm standing here before you. Well, let me connect the dots for you. At Square, we understand the challenges that small businesses face, particularly when it comes to managing finances and accessing capital. Our mission is to empower businesses of all sizes to succeed, and that aligns perfectly with the goals of Arizona Speaks. Square provides innovative financial tools that simplify and enhance the way businesses operate. From payment processing to business loans, we strive to be a partner in your success story. Just as this event aims to equip you with the knowledge to become the best borrower for your business, Square is here to provide practical solutions and support. We have a wealth of knowledge and expertise lined up for you today, and I encourage you to actively engage, ask questions, and make the most of this opportunity. But before we dive into our insightful discussions, it is my pleasure to introduce today's moderator, founder and managing partner of Apex CPAs and Consultants, Jim Chakiris. Apex CPAs and Consultants is an accounting, tax, and advisory firm with offices in Scottsdale and Chicago. In its 25th year of business. Congratulations. Jim is a licensed certified public accountant in Arizona, as well as a certified valuation analyst. Jim's professional experience is in serving growth-minded small and middle market businesses with improving profitability, increasing business value, advising the business owner through the transition from the tactical to a more strategic role in their organization, and more. Jim has a proven track record in guiding businesses towards success, and I have no doubt he will successfully lead our conversation today. Jim, welcome.
Well, thank you very much, Martin, and thank you to Square for your contribution to today's program. Thanks all of you for joining us today. We have a great program today, and we'll include open dialogue with our panelists until about 10:40. Then we'll have an opportunity for you all to ask questions submitted through the chat. And then we'll do closing remarks at about 5 minutes to 11. So I'd like to thank our program sponsors, National Bank of Arizona, Southwest Airlines, Salt River Project, United Pet Care, Mentor Cloud, and the Society for Human Resource Management of Greater Phoenix. So thank you all. Now I'd like to introduce our panel. We have a panel of two very experienced people in the banking profession. I'd first like to introduce Lillian Gonzalez. As Vice President of Business Banking and Business Banking Relationship Manager, Lillian manages and develops relationships with business clients, assessing their business needs and recommending appropriate banking solutions. With over 18 years of experience in the industry, she focuses on business lending and client acquisition and collaborates with internal team members to ensure seamless client service and contributes to the business banking team. Welcome, Lillian. Thank you for joining us today. Next, I'd like to introduce. Thank you. Next, I'd like to introduce Santiago Astengo. As a business banker at National Bank of Arizona, Santiago's sincere passion for delivering value and benefits drives him to fully understand your unique business needs and financial challenges. Santiago works as an expert in a range of financial solutions, such as access to capital, revolving lines of credit, SBA loans, and owner-occupied commercial real estate. Santiago earned his dual master's degree in business administration from the Kelley School of Business at Indiana University and in global management from the Thunderbird School of Global Management. Great. Well, welcome both of you, and thanks for joining us. It's going to be a great conversation as we talk about commercial lending for the small business community. So I'll hand it over to you and take it away.
Thank you, Jim. We are both very excited to be here. Thank you guys for the invitation. As you know, National Bank of Arizona, you may ask, we are a community bank, the bank of the community. National Bank has been around since 1984. We have 56 branches throughout the state of Arizona, and our goal and our passion is to help our communities get stronger.
Yes, absolutely. Lily, we're very happy to share this space with all of you. We, as a financial institution, understand the responsibility that we have as suppliers of capital and deposit holders. And our hope today is to create awareness on how to better access capital so that awareness can lead to positive impact on your business growth.
So what would you say are like some of the most important aspects that as a small business owner is looking to establish some commercial borrowing? What do they need to be focusing on, and what do they need to be thinking about?
Well, one of the things that is most of the time overlooked, and this happens with most of the time with the smaller side of businesses, I will say credit score. And for that, we have an array of different credit scores. We have your personal credit score, we have your bankruptcy credit score that we looked at, and we also have your small business credit score. But there is many small business owners that are not aware, actually, that there is something like small business credit score. So knowing what you're standing at, it's a huge advantage. And that's why we're here to help you. For example, in the business, on the credit score, on the personal side, you'll know about the 1 to 850 rate. Banks typically like to see take 670 and up for personal credit score. Bankruptcy score, we have a range from 1 to 1400, and we pulled that one from Experian. We typically like to see businesses in the range of 200 to 450, 550, potentially. And finally, the small business banking credit score goes from 1 to 300. The models that we use here at National Bank of Arizona, and a good range that we like to see is from 180 and up. So again, to start knowing or wondering if you will qualify for a loan, it's important to be aware of these very important 3 credit scores. How are they composed? What impacts each of them, and how you can improve them? And what are the things that you need to avoid to harm your credit scores?
Thank you very much. Lillian, what comes to mind when a small business owner is looking to establish a banking relationship, a commercial borrowing relationship with a bank? What things do they need to be thinking about?
So I always encourage business or commercial customers, or any customer of the bank, please keep a strong relationship with the bank, especially like here at National Bank of Arizona. We strongly believe in building relationships. It's not just you come in for one service and then whatever banker helps you next. No, I think we are in 2024. It's important that our business owners have their cell phone number of their relationship manager handy. You want to have our numbers saved on your phone. So when you are coming across a business opportunity or something comes up your business, or you have just any general business questions or any questions, you want to make sure that we are on speed dial for you. It is important to like I said, build that relationship. Don't be shy. There's never a wrong question. I like to say, what's keeping you up at night? If there's any at night, you better make sure that you're talking to us here at the bank, because we can guide you in the right direction. We can, listen to you and maybe plan with you and touch on key points. Another thing that I wanted to add on reports on things that we look at when it comes to business lending are the 5 C's of credit. I know Santiago was mentioning about the credit scores and, SBSS scores and FICO scores. Another thing that us bankers here, as banks, look at are the 5 C's of credit that consist of character, which refers to the borrower's reputation for paying debt on time and managing financial obligations responsibly. The second C would be capacity. It evaluates the borrower's ability to repay the loan, typically assessed through income, employment, stability, and existing debt obligations. Capital considers the borrower's financial reserves and assets which can serve as a safety net in case of financial difficulties. Collateral. Collateral refers to the as borrower pledges as security for the loan. Collateral provides us with a form of protection if the borrower defaults on the loan. And last but not least, the conditions. This one examines the external factors that may impact the borrower's ability to repay the loan, such as economic conditions, industry trends, and the purpose of the loan. So all these combined, these are things that we here at the bank look at with the score, with the 5 C's of credits. So I always recommend our customers always keep a holistic approach when it comes to your 5 C's of credit. Keep them top of mind for any decision moving forward.
Thank you very much. It's very informative. What if, so as a business owner, and I'm going in and I'm applying for a loan, say it's a commercial, say it's a line of credit, or I'm looking to finance some equipment. What sort of, aside from credit scores, like, is there like certain documentation that you like to look at, whether it's, financial statements or cash flow forecast or tax returns? And tell me a little bit about, what you look for and what you're looking for on those documents.
So yes,
so-
definitely when it comes to documentation, we do look for personal tax returns, typically the last 3 years. We also look for business tax returns. We look at your debt schedule, your personal financial statements. We look at a range, like we look at your balance sheet, your P&Ls. For startup businesses, this can be a question that, well, I'm just starting up my business. I don't have business tax returns. So for those, we look at your 2-year projections and a business plan.
And Jim,
You wanna
just to add a little bit to what Lily mentioned, we also looked at financial metrics. And the most important thing that we're going to be looking at, aside from all those financial packages, that the business cash flow and it has the ability to service the debt. We typically are looking at a 1.25 debt service coverage ratio. That's our base. That's the minimum to get approved for a loan.
And tell me a little bit about personal guarantees, when they're used, when people can, maybe they don't need to use personal guarantees. I know some of our clients that have been very established and have a long relationship with the bank will sometimes release that personal guarantee and just collateralize the assets of the company. But can you talk a little bit about when a personal guarantee may be required and when it may not be?
Most of the time, if you're still a medium-sized company, a small business company, we will require personal guarantee. That's personally, you're liable in case plan A and B doesn't work. By A, I mean our primary source of repayment being cash flow. Secondary source of repayment, plan B, is collateral. Sometimes we have unsecured loans with no collateral. So really, the third option, which is your personal guarantee, it's what's standing at the end of the line, so we can get our loan paid, basically. And companies on the middle market space or corporate space, big companies where they have a board established and everything, those are usually the ones that we will not require personal guarantee. But for smaller companies and medium-sized companies, most of the time we do require personal guarantee.
Do you want to talk a little bit about, and we get a lot of questions on SBA loans, right? The government-backed business loans. Do you want to shed some light on kind of when these might be, maybe an option or alternative to maybe conventional lending, when they make sense, maybe when they wouldn't make sense? You want to talk a little bit about SBA loans? Because there's two different types, right? There's you know, there's the one that's more related to real estate and one that's more related to business, the business itself, correct?
Correct. So we have the SBA 7A, which is mostly the most popular one within, startup businesses and stuff like that. For the real estate one, we have the SBA 504. Here at National Bank of Arizona, we are a preferred lender of the SBA. So that's those loans are very common for us. We do our in-house underwriting for SBA lending as well. Those are really popular within our startups. We use those, like I mentioned, for newer businesses that have visited the larger banks, the banks that are the money-making banks out there, which don't lend to startup businesses. One thing that does set us aside here at National Bank of Arizona is that I like to say that our bank looks into the future. And by that, I mean that, hey, we can look at your projections. We look at 2 years of projections. We utilize your business plan, which will help you, with this SBA lending. With the SBA, we also have a small business resource center that helps our borrowers get prepared. They review their projections and their SBA, their business plan, so we can submit a very strong SBA application package. With that, we require the same thing as I mentioned earlier. For newer business, you're not going to have the business tax returns, but we will your personal tax returns. And for example, let's say that you're a business owner who you are acquiring another business. So it's like a business acquisition loan, or if it's a franchise that you're purchasing, it's already an existing business. But your business itself, you are a new business, you don't have those tax returns, right? We will ask that maybe they can share with you. And a lot of the owners of the existing businesses are willing to share with you so you can submit a stronger SBA application.
Thank you. Did you want to add that, Santiago? Yeah, go ahead, please.
I do want to add a little bit to what Lily has commented. One of the main characteristics of the SBA loans, the Small Business Administration, is that we as financial institutions, we get a percentage of the loan guaranteed by the SBA. The 7A typically is between 75 to 85% guarantee that we get on the loan. The 504, it's 100% guarantee. We share the loan with the CDC. Finance 50% of the loan, 40% financed by the CDC, but we are in first place. And usually, again, we get 100% guarantee. Also, the SBA Express, we use that a lot for lines of credit. That's 50% guarantee. So that guarantee is what makes the loan, which otherwise would be looked at more riskier on a conventional loan, it makes it more appealing for us as a financial institution that we have backup of administration.
Yeah, and the qualification hurdles are maybe a little bit lower than a typical conventional loan, and it usually requires less money down as a percent, right? Like oftentimes it could be, let's say on commercial real estate, oftentimes if it's a conventional loan, it's 25% down payment, on the purchase of that real estate, and maybe SBA might be more like 10%. Can you talk a little bit about kind of how much usually the borrower has, because that's what makes it attractive, is it's a little easier to fund the transaction with the owner's organic money.
Correct. There's when we see some challenges, one of those is not having to put a down payment for a conventional loan. That's one of the reasons we can go to the SBA, where, like you were saying, the minimum down payment is 10%. It can go up to 15%, depending if it's a startup, if it's a special purpose asset, for example, a car wash or a gas station. And by the way, special purpose assets or real estate are the ones that we can only sell to someone on the same industry when we try to divest or sell the asset. So if it's a car wash, it's kind of hard for us to be able to sell that asset as an office space. It has to be for another car wash. Same thing with the gas station. So those typically are riskier assets, and that's why we typically require a higher down payment.
Yeah, that makes sense. Can you, Santiago, you had mentioned a debt service coverage ratio. You want to talk Can you talk a little bit about, that, 1.25? You want to talk a little bit about, just high level, how that is typically calculated?
And again, it's a little bit different depending on the type of or size of company that you are. But typically within our space, the small or medium-sized companies, we use it as debt service cover ratio, global. So we take into account your personal finances along with your business finances. I know that when you're moving upstream, becoming a bigger company, maybe more than 10 million in revenues, we might probably rely more on the business cash flow alone, as opposed to both personal and business. But again, the one we typically use, the 125, it's a global cash flow, and it's just very simple. We combine your personal debt, your business debt, the new credit tax, normalize that debt. So let's say your annual debt service is $1,000 a year. You will have to be able to comply with $1,250. That's 1.25 basically, debt service ratio. That's just like you're saying, at table.
Got it. And usually you were able to add back, like if a company has a lot of capital assets like equipment and that sort of thing, we can often add back depreciation to get our profit to cash flow, right? And so we're looking at all that, and plus, just the interest and all that, making sure that there's enough cash flow coming in to service the debt, right? I mean, we want to make sure that the loan gets repaid, right? So can you talk a little bit about maybe what forms of collateral can be used within a business, and then even personally, and typically what you're looking at, like a certain percentage of receivables, a certain percentage of inventory, a certain percentage of fixed assets? Can you talk, and again, I know it could vary from industry to industry and business to business, but maybe just generally speaking, it's not like, okay, well, if I have, $100,000 of equipment, you're going to lend me, $100,000, it may be, or I'll have access to a line of credit up to only a certain percentage of what the value of those assets might be. Can you maybe shed some light, the two of you, on how collateral is used and how that affects the borrowing base and that sort of thing?
Yes, so our number one source of repayment will always be cash. So for collateral would be cash flow would be the first source of repayment. The second one would be collateral, and collateral comes in the form of equipment. It could be buildings, it could be account receivables. And the third one would be personal guarantee. So any personal assets. Based on percentages, Santiago, you want to a little bit about the percentages of what we look for?
Sure. Let's say for a line of credit, we can go up to, if it's unsecured line of credit, maximum 15%, 15 of your gross revenue. If it's a secure line of credit, we can go up to 20% of your gross revenue again. And we'll typically finance up to 80% of account receivables. Eligible, very important, accounts receivables. We typically look at 30, 60, 90 days. Anything over 90 days on your account receivable would not be considered eligible for that 80% rule. Inventory, we can finance up to 50% of your inventory. And so that's pretty much kind of like the norm. And we also have real estate loans where or loan to value varies according to the industry, whether it is an investment asset, multifamily, industrial, retail, office space. As we all know, office space is deemed as very risky environment. So recently we actually reduced from 75% loan to value. Now we went 65% loan to value max. Just to give an idea how banks are usually adjusting their credit appetite. They're usually changing their policies according to the market industry.
Oh, it's very helpful. Thank you. This is more just I think a question that I see come up a lot. Those businesses who applied for EIDL loans, some of those SBA loans that you can, I think, borrow up to, I don't know, I think generally about $500,000. in the SBA EIDL loan program. Let's say that, you know, you're in a position where you need additional borrowings. With that additional borrowing, like, I think those IDL loans are like, oftentimes they get first position. So how does the bank deal with businesses that already have EIDL loans?
We have to request a subordination from SBA. There's a process for that. I'm familiar with it. I've done it already. And typically it's a positive response from the SBA if obviously they deem the business eligible and all of that. They have to also meet some requirements, but they typically will agree to subordinate the loan to the bank, and that will enable us to be in first position.
What else do you think are important concepts when it comes to commercial lending that a small to mid-sized business owner needs to be aware of? What do they need to be thinking about as they're trying to get their, you know, kind of grooming their business for borrowing and for growth? What do they need? What do they need to be thinking about?
I think it's really important that business owners, I think, first of all, I think I commend them all for doing an amazing job, for keeping our communities active, right? Providing employment for other people in the communities. I feel that a lot of times business owners do an amazing job on the operational side of the business. I think it's a great idea to connect with us, their relationship managers, and also their CPAs, and sometimes even include an attorney. So create a group, an elite group of people that you can say, these are my people that I go to, my CPA, my attorney, and my banker, you know, for any numbers related things. It's really, I think, really important that I can't stress this enough. Business owners, get familiar with your numbers. This is important, and it's okay if you're not. You know, this is what we're here for. We're here to walk you through the process to get, you know, to get you comfortable with the uncomfortable, right? To make sure that you are understanding what we look for when it comes to your balance sheet, your income statement. Now you want to talk to us because we won't steer you in the wrong direction. We want the best for you. And because you trust us, we want to make sure that we are providing top service for you, that we're going to get you to your next steps. So one of the things that I really encourage is build that relationship with us, you know, come see us. Our doors are always open. We are approachable. You can come and meet with us, you know, one-off. And if you need to call us 20 times before you submit that application, by all means do so, you know. We want to make sure that you're comfortable. There is no secret when it comes to submitting a business lending application. We are very transparent, and we want to make sure that you feel really comfortable. Ask as many questions as you need. We want to make sure that by the time you come to signing your loan doc, you're confident and you've learned, you know, the whole process.
And Jim, just to add also to the conversation, what we're trying to do here at National Bank of Arizona is, like Lily mentioned it, we want to be the trusted advisor. I know CPAs, attorneys are very helpful, and usually they're seen as trusted advisors. But when it comes to your personal banker, to your relationship manager, to your business banker, my experience in the industry is that we're being seen as someone that is just to process your loan request from A to C. But we're trying to change that perspective, that mentality. Again, we are here to help you understand where you're standing at according to your financials and what is it that you can request for a loan. It might not be what you want, but it will be what you need and what is more favorable for your healthy expansion of your business. We have many ways to help you. We can do a benchmark analysis of your business, same size, same industry, same number of employees, so you know where you're standing compared to other businesses, and also help to achieve those metrics and be a healthy business, basically. So we have, again, we can also guide you to a healthy capital structure, what would be best and most convenient according to your plans.
Do you think it, I don't know, I've always learned, like, if I have the desire to borrow from a bank and I want to start that banking relationship, oftentimes we're thinking of, you know, a loan, but does it help to, like, initially start a banking relationship, but making sure that your corporate bank accounts and your personal bank accounts are kind of, you're an established customer with the bank. And oftentimes isn't that like the easiest way to get started, where you're, at least beginning the relationship, and then they know that you've got a track record of being a customer of the bank. And does that help matters any when it comes time to borrow a loan for your business?
It definitely does help. It's not a requirement of National Bank of Arizona that you have all your banking relationships with us. I mean, we'd love to have all your banking relationship with us here. It does help because you're already building that history with the bank, and we're able to see where you're going, where have you been doing, So it definitely does help. But as I mentioned, it's not an obligation, it's not a requirement. You can have your bank accounts elsewhere and still come sit with us to talk about business lending. Our doors, as I mentioned, we are always open, and we want to take great care of you. So don't feel like, oh, I don't bank there, I can't get along with them. No. You can come get along with us. Even if, if you're not banking here yet, by all means, come reach out to us, if you have any questions, we're more than happy to answer your questions.
Anything you wanted to add, Santiago?
Yeah, basically, like she said, like it's always a proactive approach is better. Come to us. You don't have to be ready to apply for a loan. It's come for advice. And we're here to give you guidance from the beginning. It does help to have a established relationship with the financial institution. And so, yeah, it's just a proactive approach is always better.
Can you give a little bit of insight, just like, so we have a banking relationship, right? And we're, applying for a loan. But what happens a little bit behind the scenes on like what's involved in the loan approval process? And you have like loan committees that look it over, and then does it go to what does that process typically look like in, the time frame of getting a loan approved, say maybe a conventional loan or an SBA loan? Maybe you could talk about each of those and what that loan approval process looks like and the duration and all of that. And maybe even what some of the fees might be, just to create a little more insight on what happens behind the scenes.
So typically, once we have a full application package, we'll submit it, it takes it can be approximately about 2 weeks before we can get a final decision from our underwriting team. So typically it will go to us, we'll collect the documentation and submit it to the processing team, which then connects it with the underwriter, right? At that point, the underwriter and the processing team might ask for additional information, which will connect with the borrower. And every step of the way, we will be in constant communication with our borrowers, just letting them know this is where we stand. Any updates, I mean, this is what we like to do. We want to be transparent with them and making sure, because you came to us because you're seeking a loan and time is of the essence for you, right? So we understand, us too, we've been consumers, we've been also borrowers ourselves, and we understand that, hey, we don't want to be given a silent treatment, so we want to treat you like family, right? So we're going to give you every update that we can, and we're going to provide you with any changes or anything that, it's going to delay or anything, God forbid, something comes up, we'll talk to you about it. If there's collateral involved, such as real estate, that can be a lengthier process because we're going to have to order appraisals, environmental reports. But again, it's all about communication. And I think once we have that communication going, the borrower and us, it's a lot easier, we want to make sure that it goes very smooth for you.
Thank you. Helpful. Santiago, anything you want to add on that?
Oh yeah, I agree totally with Lily. There is the credit side of the house, if we call it. It's designed in a way to keep it from having conflict of interest to what their interest is of the front house of the house, which is us, the relationship manager. So it's a total separate entry where we have like zero control on the decision of the loan. There is like 2 or 3 sets of eyes that see this credit approval process. It's just not one single individual or credit analyst. So that's why we have learned through time to always be very honest and be in constant communication. Never reach out to the client and tell them whether approved or declined just from the first response from the credit analyst, because it can change throughout the final decision, basically. And yeah, just that condition, help them understand what are going to be the rules of the game, that if we request some documents, expect the credit analyst suddenly can request another bunch of documents and suddenly can request again another bunch of documents and so on. And sometimes the frustration from borrowers is, why don't you just ask me for everything at the beginning? But at the beginning, it's so hard to understand the 360 degree of the deal that they're processing. So it's not until when they set their eyes into the deal and analyze and see the different angles that they start inquiring for more questions and more documents. So it's just communication, so their patience with us.
Yeah, I mean, absolutely. Like, you know, you may not know that you need more information until you see the initial requests, and if there are some things that you need to explore more deeply and that sort of thing. So it can be a, you know, a process, an administrative process that we have to go through as business owners. But, you know, that's a small price to pay in order to help your business achieve its goals and objectives, right? And we just can't do it without the support of you know, great banks, lending institutions like yours. So we have a few minutes left here, about 3 minutes, and then I'm going to open it up for some Q&A from the audience. So I'll give each of you a few minutes to talk a little bit about, just from your own perspective, you know, the most important things that people need to be considering when they're evaluating whether they need a loan, or how to go about doing, you know, getting a loan, and you know, and that sort of thing. So you want to just you know, shed light on maybe what the business owner needs to be thinking about, you know, when they're looking to approach you for a loan?
I think that the most important thing, as I mentioned throughout this whole interaction, is stay connected with us, with your banker. That's key, right? Stay connected with us, ask all the questions that you might have. What's keeping you up at night, right? We here at the National Bank of Arizona, we take great pride in helping our business owners. We want to alleviate some of that stress, you know. We want to prepare you for the what if moments. We want to make sure that you are well prepared, you're making a well-informed decision. With this being said, I want to share also that we do webinars throughout the year. So our upcoming webinars are in February, and all business owners are welcome to join. So we have upcoming webinars February 28th and 29th, where Santiago and myself will be hosting these webinars as well. They start at 11 a.m. Now, go visit our website, National Bank of Arizona, and it's under the multicultural banking site where you can register. I really encourage business owners, stay on top of, you know, business lending, because maybe you might not need it right now, but moving forward, you want to prepare for the future, right? And it's never too late to get started when it comes to the growth of your business. Be prepared for, like I mentioned earlier, be prepared for those what if moments. And we're just a phone call away. Like I said, you know, this is 2024, call our cell phones. You know, no business owner should be going through the 800 number just to get their business questions answered.
And
Great, yeah,
I just
thank
want to
you.
quickly add,
Go ahead.
I just want to quickly add also that because we have to provide capital in a responsible way. There is some things we're going to be looking at on the operations of your business. So it's important for business owners to understand before they come to us their key performance indicators of their business, to be ready to answer some of the important questions that we're going to be asking, like what's your management strength, your experience? Is there any cyclicality on your business operations? Is there any change on the industry? Who are your primary customers? How do you get paid? Who are your primary competitors? And how do you differentiate from them? Do you have a business strategy? What's your business strategy for the long term? Do you have a succession plan? All of those things they need to be aware of before coming to us, or we can guide them on how to have a proper understanding of that, those questions as well.
I appreciate it very much. And I would just say personally, I'm a huge fan of National Bank of Arizona and also a very happy customer. So thanks to people like you, and it's just it's a great bank, and it's perfect really for the Arizona business community, because the National Bank of Arizona, it has the technical depth and the size to meet all of our needs. But also what I really like about it is its emphasis on personal relationships and that attention to the customer. And I think that's an intangible that is really hard to find nowadays. And National Bank of Arizona really does a great job with that. I'm saying that personally. So thank you.
Thank you, Jim. That means a lot to us. Thank you.
Good. All right. Well, we have a few minutes left here. If it's okay with everyone, I'd like to pivot to open it up to maybe some questions from the audience. And I've got a list of them here in the chat. You guys mind if I run through a couple of these and we can maybe talk through them in our final minutes here?
Let's do this. Go for it.
All right. All right. I had one. Okay. How can someone get funding for commercial property, especially when it's so expensive? Obviously we've seen, interest rates climb a little bit, and, the cost of capital is a little more expensive and that sort of thing. Any suggestions or advice from this audience member asking about commercial property financing?
Yes, we can look at different structures where we can perhaps look for a longer term on your loan and a longer amortization than typically, and that will reduce your monthly payment and make it more affordable for you to take a loan right now and hold on until interest rates get better, and then you can just refinance. But it's more complicated than how I'm saying it. But we can definitely take a look at all the granulars on guiding you through that proper capital structure in this economic environment of high interest rates. But at the end of the day, also, it's if you can afford it. There's businesses that really need to get into a building now. They cannot wait for interest rate to go down. There's other businesses that might just weather this interest environment and wait for better terms and conditions. So it's all according to your specific needs at that specific point in time of your business. But we will work with you.
Yeah, no, that's really good advice, and that's a good concept, that if you can work with a bank that can stretch out the payment terms to a longer amortization, that reduces the monthly cash flow requirements, right? Which might make it easier to borrow, for whatever your needs are. Lillian, did you have anything you'd like to add on that question regarding financing of commercial real estate?
So I know a lot of people, because of higher interest rates and, because the economy is the way it is, a lot of people are shopping around. They have not made up their mind. One of the things that we can do for you, we can do a pre-flight, kind of review before we actually submit everything. We'll collect your financials and take it from there, see what we can work out for you. Instead of, running your credit here, running your credit there, and, the last thing we want is for your credit to become hurt, right? So we want to help you. So come see us, come visit us, come call us, we can schedule an appointment one-off and we'll talk to you.
Great. Somebody else had a question, and I'm more personally curious too. Like, you talked about where and how to find information on a business credit score. Is that usually kind of like, yeah, you want to talk a little bit about that?
Well, I do know that obviously everybody knows that if you go to the creditreport.com, I think you can pull up your personal credit score. When it comes to the bankruptcy and the small business credit score, that's a service that us as financial institution, we get from Experian, and we pull those from Experian. Another way that you can probably get a better understanding of your small business credit score is to go to the Dun & Bradstreet website. Especially if you're a small business and you're just starting and you don't have any credit score on your small business, this will be highly beneficial for you, because many people think that they need to open a credit card or get a big loan just to start building credit, but that's not the case. You can literally start building credit right away with a trade credit line open through the Dun & Bradstreet website, or as simple as just office supplies, let's say $30 a month, something like that, and start building up your history of your small business credit score. And you can check how you're doing through your DUNS number in the Dun & Bradstreet website. After you have history, you can maybe applying for a credit card with the bank and so on, progressively increasing. But for the bankruptcy score, I don't think there is, I'm not sure, I don't think there is a way for them to access those on their own. But we as financial institutions have access to those scores through Experian. Maybe there is, I may be wrong. I have to take a look at that.
Yeah, no, that's good. That's good. Okay, I'm just kind of perusing to see if there are any other questions and if any of you have questions, please put them in the chat. One that came up is, are there any restrictions on fund usage, right? Like, okay, if I've got a business operating line of credit, you probably don't want me going out buying a new Lambo or a new Porsche or something like that, right? I mean, you know, there probably are some limitations, right? They need to be used, you know, for business purposes and that sort of thing. You want to talk a little bit about some of the restrictions that might be placed on funds? Like, I know there are equipment loans, lines of credit that have to be used only for equipment and not for funding operations and that sort of thing. Do you want to talk a little bit about that?
So, one of the things that we share is, like, first of all, don't commingle your fund. You know, you don't mix your personal with your business ones. You want to use your funding of your loan for the requested, for what you requested it. So, like Jim said, if it's for equipment, you want to stick to equipment. Why? You don't want to use a line of credit and go buy equipment that's going to be super expensive, because lines of credit have variable rates, right? And if you want to buy it, you want to use it to buy equipment, we can land you on a term loan with a fixed rate versus you having to pay higher interest rates. So that's where the importance of having that broader financial conversation with us, your bankers here, comes into place. Because if you're ultimately thinking, you come to the bank and say, oh, I want working capital, but if we're digging for questions, you know, we're just asking questions, is because we want to make sure that we want to land you for you. And of course, you know, we don't want you to use your money to, you know, for illegal stuff, right? We want to make sure that you're using it for the right ways, you know. So if it's for working capital, you want to make sure that you're using, you know, the right product instead of, you know, paying a higher interest rate, as I mentioned earlier. So just be open to us, you know. It's okay, you're in a safe zone with us, you can trust us.
I mean, let's face
Yeah,
it, when it
that's-
comes to
that's
loans, go ahead, Santiago, sorry, please.
No, he's gonna say that's exactly what we do as bankers. We kind of size and guide you to what is the right loan structure of your loan. So there's often a mismatch on loans, like Lily was saying. You cannot get a line of credit and spend it on long-term capital needs, which is equipment or buy a building, because you are attached to a variable interest rate. So it can be very risky, and you won't be able to pay it off. So just to give you an example, if you have a line of credit with us and we are renewing, we see that you never revolve your credit, or you never fulfill your 30-day resting period of your line of credit, we are gonna consider it not to renew that line of credit, and instead we're gonna term out that portion of the loan, that balance, for a longer term loan, because we are seeing that you are not using it properly, the way it is intended for, which is a credit card. You just use it, pay it back. You use it, pay it back. Short-term needs only. And EIDL loans, probably many people have EIDL loans. You gotta go with your account and make sure you're spending the money the right, because you get into big legal problems if you spend it on the wrong assets.
You know, it was a good point that you made. I think it was you, Lillian, the importance of, and we preach this to our clients all the time, like, you really need to have a solid relationship with your banker and with your CPA and your legal. Like, I do agree with that. And actually, you want them all to know each other and be reputable, right? I can't tell you how many times I have, let's say a bank will say, I can't bank this particular potential customer because their finances are out of order, and it's let's say a firm that no one's heard of, or maybe they don't have the best reputation. So really aligning yourself with really good professionals, your banker, your CPA, tax professional, and attorneys, I think are very, very beneficial. Makes a real strong team that are all interested in just helping that business be more successful. So I think that was really good advice. Somebody had a question on typical payback term in terms of like a loan repayment, and you want to shed a little light on that? I mean, I think it depends oftentimes on the asset that you're using it to buy or collateralizing, right? Maybe real estate will be a longer term payback period. Maybe there's a balloon. You could talk a little bit about balloon payments, or if it's equipment, it might be a shorter term. Do you want to talk a little bit about usually what the payback periods might look like?
So yes, for term loans, it could be, 3 years, 5 years. It all depends on the assets. It could be as long as, maybe 10 years, 25 years, 15 years. It all depends on what you're funding, what you're financing, I'm sorry. Just talk to us bankers. Also, once it all depends also on how comfortable are you with your payment. We don't want to give you a high payment, right? And, cram it all up in 3 years and you have higher payments. We want to make sure that you're comfortable. So that's why I can't stress enough the importance of having that communication with us, letting us know, where are you comfortable? How are you comfortable making a smaller payment? Are you comfortable making a larger payment? So it all depends.
Correct. Just to add a little as well, it will all depend on the collateral, like Jim was saying. On equipment, on a conventional loan, we can go up to 5 years. We can finance up to 100% of the equipment, typically, unless there is a special asset like an aircraft where we go up to 75% only. But we can also do it the SBA and get a longer term, and that's what we're able, through a different capital structure and different way, to reduce your monthly payments, because the SBA typically allows for longer terms for the repayment of your loans. But it will vary. Same thing with owner-occupied real estate. If it's an investment property, you should never go more than 10 years fixed term, and you'll have a balloon payment at the end. And at that point, you either pay your loan off or you refinance.
Right. They call it a reprice, right? It kind of like, that's kind of how the balloon works, right? They might amortize it over 25 years, but after, let's say, 5 years or 7 years, whatever that balance is, it reprices at whatever the current interest rate is. And then those payments are, oftentimes you probably like to see when it does reprice and they refinance it, that they shorten the amortization on the refinance loan, right? So that you're not continuing stretching it 25 years, 25 years, 25 years, right? Is there a little bit of truth to that?
Yes, we reset the loans. They usually mimic either depends again on the loan. If you have a 5-year real estate investment loan, we will use the 5-year treasury rate as our base index. If you have a 10-year loan, we will use the 10-year treasury rate index. Sometimes we can do a 10-year term, but it will reset at the 5th-year mark to the current interest rate environment. That's sort of the way to diminish the risk and or exposure to the.
Fantastic. Just in our final seconds here, are there any industries that are more difficult to bank than other industries? Like, are there some out there that are just higher risk, that are just more difficult to bank, that the audience maybe should be aware of?
So we do have restricted industries. So as you know, we are regulated by the federal government, sorry. And we, at the current moment, and these things can change, just as of right now, We do not do any business with anyone who's selling marijuana, firearms. And Santiago, you wanna hop in here?
Well, gambling,
Money service businesses as well,
money service businesses,
or restricted
gambling.
industries.
And then I want to stress that this prohibited industry changes also throughout time. For example, we were financing gun stores 4 years ago, but with the change of administration, the political, I guess, environment, the appetite has changed a bit. So now we don't. Maybe we start financing them again in 2 years, 3 years. It can change. Banks can literally change their credit appetite from night to
One
morning.
day to the next.
That was really helpful. And I want to thank both of you so much for your expertise and for this time together. I'd like to now turn it over and introduce Ken Chapa. He is the Economic and Tourism Director for Avondale Edge. So take it away, Ken, with your closing remarks, please.
Good morning. My name is Ken Chapa. I'm the Economic Development and Tourism Director for the City of Avondale, also known as Avondale Edge. As we conclude this insightful session of Arizona Speaks Financial Preparation and Access to Capital, I extend my heartfelt gratitude to ASBA, each participant, sponsor, and our esteemed panelists for their invaluable contributions. Today's dialogue has illuminated the significance of financial literacy and access to capital in nurturing the growth of small businesses. In Avondale, my team proudly operates under the banner of Avondale Edge, the economic development growth engine. Our mission is encapsulated in our name. We're dedicated to fueling your business growth, whatever form that may take. Whether you're considering relocation, expansion, or starting anew, the Avondale Edge team stands ready to assist you in making your Avondale business's new home. From navigating regulatory processing to accessing financial incentives, we're committed to your success. I commend the efforts of all involved in fostering a conducive environment for entrepreneurial success and to our small business attendees. I hope you're able to take what we've learned here today and forge ahead, equipped with newfound insights and determination to thrive. As a follow-up, ASBA will be sending out a recap of the key takeaways from today's events and a recording of the session. On behalf of ASBA and the Avondale Edge, thank you for attending Arizona Speaks. Have a great day.
Thank you.
Thank you.